welcome everyone. How's everyone doing today? Hopefully everyone is having a good trading day. Welcome. My name is Melissa Armo, as Renee said, and I own a company called The Stock Swoosh. I live in New York. Beautiful picture of New York here. I live in Manhattan. And it's very exciting to be here today. We're going to talk about the strategy that I have developed over the course of the last 10 years plus. It's hard to believe I've been trading that long, but I started trading at the end of 2008. And like many of you, I didn't know what to do when I started. And I kind of floundered around. And very quickly and very early on, I realized that focusing on one strategy was the way to make money. And when I first started, I really had only one goal, which was to change jobs. I was a mortgage broker for a long time, and the mortgage industry was changing, and I just was really tired of it. The hours were long. And so one of the best things about the strategy that I trade, which we're going to talk about today, is that it really sets up very quickly in the morning. So whether your goal is to make $1,000 a day trading or more or less, depending on what you can afford to risk, which we'll discuss today as well, it's the idea where you are in and out of trades very, very quickly. So you are looking to capture a move in a stock, and I call it the money move, and get in and get out. And I think that's the best thing for day traders. You got to remember that day trading is not investing. And investors, you're looking at the longer term, you're looking at the bigger overall trend. You don't need to focus on necessarily being in the correct trend overall for something if you're day trading. You just want the quick move. If you have any questions after today, you can feel free to email me at melissa@thestockswoosh.com, or follow me even on YouTube. I have a lot of videos and webinars on there, or feel free to give me a call at 929-3200-GAP. And I see the questions as we go along here today. I'll try to answer them as we go along as well. So that's me. So far this year, it's been a good year, 2018. My system has had a 90% win ratio since the beginning of the year. Last year was around 75 from January to the end of the year, which is still super great for a day trading system. So we'll see what happens for this year, but it has been a good year. There's been a lot of volatility in the market. And for those of you that are new to trading and don't know this, volatility is actually good for active traders. May not be great for investors, may scare investors away from the market, but as far as being active day traders, volatility is a great thing. But like anything else, you got to get the move right. You got to get the direction right. You can also watch me on Fox News and Fox Business Network, some other networks as well. In fact, if you're around today after the market, I'll be on Neil Cavuto today on Fox News at 4:45. So you can watch me. I'll be discussing the market, and we're following today. So I'll be talking about that this afternoon. Anyways, let's get down to it. So the time of the day is critical to maximize your profits. If you're a day trader, you've got to get in and out between the hours the market's open. And I'm talking about post and pre-market trading. I'm talking about 9:30 to 4. It's a very different trading environment if you're trading after hours in the morning. And sometimes stocks flip. So I want to focus on the time that the market's open, and specifically between 9:30 and 10. That to me is the critical time in the morning, right into the open, when most stocks are going to have the biggest moves, that gap. And very often you can determine the directional bias a stock will make for the rest of the day based on how it's trading and acting in that first 30-minute period. But if you can capture the move, actually play it and get out, or play it and be up, even if it's still going after 10. I don't have a problem with people holding a little bit after 10 if you're up and it's still working, okay? You want to make sure that you capture the big moves that happen in that period. And the irony is that most day traders don't even take a trade till after 10. They're waiting for the trend on the live day. That's not what I do. I'm usually in and out very quickly. In an ideal world, I could be in and out of trade in 5 minutes. So we're going to go through the trading results here for the last 13 days. And if your goal is to make $1,000 a day, you would have hit more than that if you would have been in the trading room with me. So you could have made over 20 grand. Risk in these trades is an advanced risk. If you would have made half that, still would have been 10 grand in 13 days of trading. This is following the calls that I give in the live trading room. So you could have made over $20,000. And that's nothing to sneeze at. Some people don't make that even in a year in trading. So these are some outstanding results, and it is because of not only my system, but the focus that the system gives you. You've got to chunk it out when you're trading. You take it day by day. You get up today, you see what you get. You get up tomorrow, it doesn't mean you're never going to have any losses. You will sometimes have a loss, 1 or 2 a month. But you don't want to trade all day and have consecutive losses day after day, because then you're not going to be able to achieve your goals. And by the way, if you are, then you're probably not doing something right, or your system doesn't work right. So it's good to take a step back. If you're failing to make money in the market and failing big time, and then you really got to rework whatever you're doing or your system, or like I said, time of the day. Time of the day is so critical for me. If you look at the time period from 9:30 to 10, which we're going to look at some charts here this morning, and look at, say, noon to 12:30, completely different setups, and you don't get the same big moves because institutional traders tend to go to lunch sometime between 11:30, and sometimes don't come back till 2. So you get the biggest moves really in the morning. And sometimes you get big moves into the close, but I don't like to sit all day for 5 hours in between just to play the close. So I focus on the morning and then I'm done. And again, how do you become successful? Follow a system. Now, if you're here today, you're here because you want to learn more about what I do in my system, which I call the Golden Gap. But whatever you decide to do, whatever day trading method you decide to do, I say stick to it. Because if you're all over the place doing lots of different things, you're not going to have any level of consistency. And so therefore, it's going to be hard for you to achieve your goals, the monetary goals. Now, getting back to what I was saying, time of the day. You have to almost be like a sniper, like you're going into the market and out quickly. If you're an individual day trader, you go in and quick out, or you're watching it. As soon as you're in it, you're watching, and you take it when you're up. Your goal is to make money. You're not an investor if you're day trading. And that's fine if you want to be an investor too. You could take swing trades. You could do long-term options trades if you want. You could use my system to determine the directional bias for that. But what I like to focus on, like I said, is the quick moves in the day trading. And you're going to act like a sniper. You're in and out quickly, and then you're back to the home base. You shut it down. You're done for the day. A lot of people think when they're trading, it's about taking more trades. Like some people will take 4 or 5 trades to make $1,000 in a day. I prefer to just have the 100% focus on one thing and make it all in one ticker symbol. I think that's the best way to do it. It also limits your losses. Lower odds, you're going to take 5 trades in a row to make that money that are going to be good. Higher odds, you could get one thing and get that kind of money really good. And how do you? Well, with size. So that's what we're going to talk about as well today. So here's all the trade calls for the last 2 weeks. I just plopped them in here since the beginning of the year. And most of the trades are shorts. Sometimes there's a day where there isn't any good trades. So SANM was a good one on the 22nd, 23rd, no trades. ULL was a great one on the 24th. That continued. But again, I focus on the morning. NWL was a good one on the 25th. Really nice move. INTC on the 26th was also a nice move, and I got out early on that, but it still continued. Shohu, really good one, $3,500. January 30th, Met was a nice trade. Juniper was a good one on the 31st. eBay was a nice trade on the 1st of February, and Apple was a really nice short on Friday. Now the market happened to fall Friday too. I got out of Apple in the morning, but Apple went to the dream target, which was 160. So if you had held Apple all day, which you had the market with you, could have made way more. But again, I focus on the morning. But there are some days where if you've got the market behind you, and actually today would be one of those days, the market's red today, you can continue following some of these trades down. And most of my trades, like I said, are shorts. No trades on Monday. Met was a good one on the 6th, and CMG was yesterday. And CMG, I also called a put. CMG is definitely lower. In fact, I haven't looked at this since right before the webinar, but that looked weak today. And I'm sure that's breaking down, following through with the market today as well, because that had earnings the previous night, and that definitely looks lower. So in 13 days, you could have made $20,520. Risking approximately $1,000. Some trades were a little bit more, but you're looking to take share quantities that will vary with the stock. So for example, if you risk 50 cents in a trade, how much size are you going to take if you want to risk $1,000? 2,000 shares. But you might get some days where the risk is less. Maybe it's only 10 cents. And if you're going to risk $1,000, you could take way more. So your quantity of the share size will vary. Sometimes you're going to take 5,000 shares. Sometimes you're going to take 2,000 shares. Sometimes if you have a big stop and it's $1, you might only take 1,000 shares. That's part of the consistency as well of chunking it out, because you don't want to do 2 trades, take an abnormal risk in the one and that one doesn't work, and then have an amazing trade and not take enough risk. Okay, so your sizing has to be the same. Whether you're looking to risk 500 or 1,000 is up to you. So I'm looking to flip it around at least once, just so you know. So if you look to risk $500, Be trying to flip around that $500 once in a day. More is great and very often happens in some of these, okay? Like Apple was one too. But if you want to take a certain amount of money, you're looking to flip it around, whatever you can afford with your risk. If you can afford $1,000, you can take it. You're looking to flip that around daily. And that is what I look at doing. So let's talk a little bit here about knowledge. You know, there's so much information out there about trading, about the market, about charts. Now, I'm a technical trader. I don't focus on fundamentals. However, I know a lot of people like that stuff. And since I've been talking on TV, I've been talking about it too. But when I get up in the morning and I look at something, I'm 100% focused on the price. It's how I make my trading decisions. If the fundamentals back up the technicals, go for it. All right, if that helps you get the conviction, fine. I don't have a problem with that. However, if the fundamentals and technicals don't match up, I say go with the technicals, because the price of where something's at right now, this second, is a much better indicator than looking at the fundamentals, which could already be priced into the stock and what it's doing, or something way in the future that's not happening yet. Like, for example, the market. Fundamentals of the market look great. No reason to think the market's going to change. Trend market is still bullish, but we've had a couple sell-off days in the last week. So if you're scared and you're a long-term investor, you might be getting out. But if you're in it for the long haul, market still looks very strong. Fundamentals are good. Technicals are still good, but you might be scared because we have had about a 10% correction, and we'll see where I end up closing today. But it's really the knowledge of what you're seeing in live real time when you're a day trader, and it counts so much. Because again, if you're a day trader, you got to be in and out before 4, and preferably, in my case, I want to be in and out in the morning. So what do? I created my own method to determine which stock to trade each day in what direction that's gapping. And the reason my system works so well with a high level of accuracy is because of the fact that I'm looking to see what institutions are doing in the stock. Are they buying the stock or are they selling it? Is panic coming in, or is there belief in the fact that the stock is going to move higher and it's getting bought? So I'm looking at a chart pre-market, or you could do it post-market. When a stock gaps, some stocks gap up, some stocks gap down, and I'm going to go over when a gap is in a minute. And I'm looking at that, and I'm trying to determine if it's a long or a short. And that's what I do, and I do it before the open. So I have a checklist I go through. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I go through and I rate each gap. And I look to the short side first, though I will sometimes do longs. I total the points, and if it rates 20 points or more, I'll go and do the gap in the direction of the gap. So if a stock's gapping down, like for example, CMG, I'll rate it. If it rates good per my system, 20 points or more, I'll look to short it on the day, or you could do an option in it. And you can day trade options too, especially if they're expensive price points, you can do that. And then I'm looking to get the move in the morning quick, in and out. I'm looking to get the money move because that's all that you need. You only need one quick trade in the morning to be profitable. Because remember, what if you take a trade and you're up in the morning? And then what if circumstances change? The market changes direction. Your stock starts to do something different based on the market or economic news or whatever. It may reverse, and you may end up taking another trade and give the profits back you made in the morning, which is just, horrible for people. And I used to do that. In the first few years I traded until I finally realized that was craziness. So it is very important to just focus on what you're doing in the live moment. Because when you are thinking you're gonna get, if you start the day, you make $1,000 in 5 minutes, and you say, oh my God, I could do this 5 other times today. No, not necessarily. Low odds that would happen. Okay, you look at it like a job. You go in, you do the job. The job is that you're gonna make money, and once the job is completed, you're done, and that's it. You just say, I'm done, and I shut it down. Now, that's not to mean if you don't want to do 2 gaps, you might, but be aware of the fact that if one doesn't work and one does, you would have had your goal in for the day, and then when you would have given the profit back. So that's not ideal. So usually when I'm done and I'm up, I stop. And I really teach people how to do that too, because I think it's important. So I run a live trading room, and we shut it down in the morning. I mean, some days I have it open to 11 a.m. Sometimes I close it at 10:30. It's just in and out quick. So let's look here. This was Snap. This was one from yesterday that happened to be a bullish gap that worked huge. If you played it, guess what? Right out of the gate. You had to be aggressive as long. Snap had earnings. closed here and gapped up. Now, for those of you that don't know what a gap is, it's when a stock closes at a set price here at 4 o'clock Eastern time and opens in the morning at a different price. So Snap closed the night before right here around 14 something, opened up in the morning around 17 something, gapped up 3 points. That's nothing to sneeze at, okay? Then it opened, this is a 1 minute chart, 9:30, 9:31, 9:32. You could have gone long Snap right in here and it went poof, and it took off like a banshee. You could have made more than $1 in this move right in here and been done for the day. Now, it ended up going to some crazy number. It was like over 21 or something yesterday, if you had done a second trade and or held it all day. But again, that probably wasn't the best thing to do because the market was kind of flat yesterday, wasn't really strong. And again, I say no piggy targets. And this is decent money. This is really good money. You don't need anything else but this to live off of, okay? Someone's asking a question. You asked Renee about the recording. If you're using options, do you ATM and do you go out 2 weeks, 1 month, planning on a quick close? You can do the options out longer, but you're going to pay up, obviously. If something has earnings, if something is, if it's, it depends on the time. If it's like Thursday, then I'm going to do it out a week or 2 weeks because I'm not going to do it out for the next day, Friday. Even if I think it's going to have the move Thursday, it's going to hold more of the time value better, and usually they continue. But if something has reports on a Monday, I might do it for that Friday if I think it's going to have a move, and I'll be in and out of it in 1 or 2 days. As far as ATM, I don't know what you mean by that. I don't know what your question is about that, but you can write it in the room again. I don't understand what your question is. Anyways, this is a good example. Again, time of the day, 9:30, 10. Boom, boom. That's a money move in a long. So how do I find the money move? In gaps, in quality gaps, in gaps that rate per my system, that institutions, which in the example of Snap, are going to buy, or institutions might sell off of, like in the example of CMG, or Apple even last week, they're selling. So you're shorting the selling action. So you as a day trader will short, the institutions are selling, and sometimes they're shorting the stock, and CMG, it really is being shorted. So what is a gap? A gap is something that happens in the post-market or the pre-market. It's when a stock gaps with the opening price today is different than the closing price of yesterday's trading. A gap is a break in price action from one day to the next. Simple. Again, here's the Snap. This is a daily chart. You can see it better here, where it closed and opened. And look at the move it had. It did go over 21. Someone's asking another question. You can do a whatever strike you want for the options. Someone's asking about that. It depends. Usually what I do when I'm figuring it out is I determine the target. I would determine the target for where it's at, where it's opening based on that day's target. That's how I determine the gap target. So I determine the strike based on the target. So the strike is usually the first target if I'm looking at something, if that makes sense. In other words, the CMG option I called yesterday was the 270 puts, which it went through the strike. So that was the target in yesterday's trade. And by the way, it went there and went through it. So if you hold it through that for 2 more weeks, obviously it should drop even more. But I always do first target as a strike, which is a good rule of thumb. And here it is. Here's the CMG, but actually, like I said, someone can tell me where this is at right now, but you know, this is lower no matter what. I'm sure this is probably dropping today though with the market. So there are a lot of gaps. Again, I prefer to short, but not all are playable or what I call predictable. In fact, many are not. And I know this sounds crazy, but the market gap down on Monday, it was not predictable that the market would have made that sell-off. No one could have predicted that sell-off was going to happen the way that stock gapped. And in fact, we were green and rallied in the first hour of the day on Monday, even though we gapped down in the market. You couldn't have predicted that drop up for fall, so you don't play it. There's nothing to play. You have to be able to predict it. You have to have high odds. Having a system and following it to the letter means high odds. It doesn't mean every trade is going to work, but it means more are going to work than don't. And that's how you're going to be profitable as a trader. And that's what you got to focus on. So you got to look at the ones you want to play. And again, how do I determine that gaps made by institutions? Let me just see, did somebody have a question here? I just answered it. Do I ever find gaps indicated before they take place? I use all charts. Someone just asking me. No, you wait for the gap to happen. I didn't look at what's out for tonight because I'm so busy right here now today. But whatever's out tonight, you just wait. Whatever's out tomorrow morning, wait. You just wait and see what's going to happen. Sometimes I get a feeling, and I think, like I had a feeling Disney was going to gap up. But when I saw the gap up in the earnings on Disney, whatever night that was, I think it was Tuesday night, I didn't like it. I said, oh, this isn't really what I thought it would be. So I had a feeling, but you don't take a trade in it and you don't do anything with it. And even though it gapped up, guess what? It fell. So it wasn't a good gap to go long. I would have much preferred Disney if it had gapped up huge, like big time, kind of like the snap. Then I would have been all on top of Disney, but it didn't do that. So you wait. Anyways, one is institutional money. It's a big flow of money going in a certain direction and what moves the market and stocks. And it creates momentum and sets the trend in charts. And when you're looking for institutional money, you're really reading the side of power in a stock so you can play it. And you want to be on that side of the power for you to make money. Institutional money is in charge of the market and stocks at all times, and don't forget it. So that's why it's very tricky right now in this market, because there is serious institutional money long in the market, but there's a repositioning of money that's happening right now where there's some profit taking and people moving money in bonds, and that's scaring people. You do have some institutions selling here in the last week, that's true, but not enough to say we've changed the trend to start shorting the market. But you don't buy back in yet, okay? You wait. Anyways, here was Apple. This was the Friday move. All right. And again, you know why you wait? Because I'll tell you, Apple gapped up and then flipped. Oops, hold on. Apple was up at one point in the night on Thursday, and then by the morning it was there. So that was crazy. So it was actually gapping up at one point, and then it opened down. And I'm telling you, that can happen. Or it could look very different. And in that case, it really looked different. Anyways, here was the short. Again, 1 minute chart from Friday. You could have done it, got out. You could have done it, waited, pushed back, got the drop. And that's what I did. So, or you could have just done it here. And I didn't even get this whole thing all the way down, but it was still a really nice trade. Share quantity, again, depends on your risk. Risk in this trade, 1350. Share quantity, 1,500 shares. Again, it depends how much you want to risk. You risk more, you can risk less. Total profit, $2,000, and this really went though. But in and out, I was in and out of this quickly. I didn't get this whole thing all the way down even in here, but you see here, this was 162-ish. It went to 160, as you can go back to the bar here, see where it ended up. Then it followed through on Monday with the market sell-off too. So Apple hasn't looked that great. Again, you know, I don't predict the gap, I wait for it to happen, and that's what you had to do. So Apple just didn't do it on the earnings here, and neither did Google last week either. Did I miss some question? I think I got everybody's. Okay, so that's the Apple. Good move. Boom, in and out. Time of the day, 9:30, 10. All right, here is HBI. If you did this morning and got in and out, time of the day, 9:30 to 10. Boom, boom. Okay, this was HBI, it was a gap. Stock had earnings, closed the night before up here around 21.90, gap down here in the morning around 20.10-ish, 20 bucks. So this had a beautiful move, 10 minutes, in, out, okay? That's all that you need to do this, to make a living or a career out of it, but you have to be like a sniper. You act like a sniper. You gotta know where to take it, you gotta know where to get out, you gotta know where to put the stop, you gotta know what stock to trade, you gotta know what direction to do it, and you gotta be all over it, okay? Share quantity here, 5,000, risk 1250. Again, your risk needs to be about the same each trade. Went to the target, first target, 1950. Actually broke a little bit in the morning. Profit, 2,250. If you had risked 1250, you didn't have to risk 1250. You could have risked half that. All right, you could have risked 600 bucks and still made $1,200 on this today. So it depends. If your goal is really to make $1,000 a day, say you don't have the finances right now to take that risk, just take the risk that you can take. If it's 200 bucks a trade, take it. Start yourself slow, build it up, build the account up, take your time. As long as you're consistently moving forward and the equity curve in your account is up, even if you have 1 or 2 lost days a month, you're gonna be okay, and you're gonna build the account, and you can still take some money out in profits to pay yourself each month, which I think is important too, and you will be helping yourself with the confidence and the conviction that you can do it. The time of the day is a huge focus for me, but of course you got to get the stock right. But you know, I really love doing this method that I created because you have the rest of the day to yourself. I couldn't do this TV stuff if I had to trade all day. I couldn't do it. And the days when I have traded all day in the past, I'm exhausted by 4 o'clock. exhausted. My eyes are tired. I'm telling you, your focus is not there for 6 hours. I say you can be perfect for 15 minutes, 30 minutes. You can be perfect an hour. You can't be perfect looking at something for 6 hours plus. You get emails, texts, your phone rings. You know, you got to walk away every once in a while. You can't sit like a robot at your computer. I'm telling you, you do so much better when you just look at it. You get up in the morning and you sit at your desk and you do your job and you go home. And you shut down the platform and you just shut it down. So I'm looking for stocks that have momentum. I do not trade penny stocks. I think they're worthless. I think you got to trade stuff that has volume, volatility, momentum. You do want to be aware what the market's going on and other things too. But when I'm watching in that morning period, I very often don't have to worry about the market. Now, if you're in stuff late, you may have to worry about the market. And again, not all gaps are created with institutional money. So people talk about gap fills. Guess what? They're not created with institutional money when a stock does that. It's not predictable, playable, and I don't want to be with that money because it's not the right money. The right money is the big money that's moving the market, that's moving stocks like Amazon, Facebook, Google, Apple. That's what you want to be with, those people. That makes it easier for you to profit. That's where you're going to get in and out quick. And when you're trading crappy stocks like that, you have to take such an abnormal size to profit that when they move or move against you, you can get really, really hurt. And you don't get good fills, and it's just crap. No institutions are buying penny stocks. You want to be with the people that are rich, that are smart, and that know a lot more information than you ever will. So that's where you want to be. Think of yourself like a business. You're a business person, you're running a business, and you're going to go with where the smart money's going. You have to learn how to read it correctly, all right? And if you can do that, then you can make way more than $1,000 a day, as you've seen. But the nice thing about gaps is you get them all the time. Almost every day there's gaps to look, well, every day there's gaps to look at, but every once in a while there's one that I don't like. We don't do anything. But, you know, there's plenty of good ones. And right now it's earnings season, so there's tons. You're looking for a big move. And you're looking to determine the gaps that are meaningful and the gaps that are not meaningful. Most gaps that happen aren't. So you have to determine the ones that are, and then you'll decide what to do and when a change is occurring. And then that's how you can read where the power of money is going. It's price action. Like I said, I'm a technical trader. I'm looking at these things based on the price action. And if you are willing to focus, and again, I focus on the 1 minute chart when I'm taking the trades, and I stick to that time frame in 9:30 and 10, you really can capture these very profitable moves. And I do use stops. So I put a stop in so that if the trade doesn't work, I'm stopped out with a loss, but I want to be out because I don't want to be in something if it really goes against you in a big, big way. Let me see if there's some questions here. How to identify big money is at play? I do that with my 26 points. That's what I teach in my class. It's a whole weekend class. It's this weekend, February 10th and 11th. I'll go over that at the end. It's not something I could even tell you in 45 minutes, but at least I'm telling you that's what I'm looking for. How to find reliable data showing volume for the FANF stocks. What do you mean reliable data? There's plenty of reliable data out there. Free stuff on the web is going to be delayed, but real lifetime charts I find are very reliable. I don't know where you're trading, but you should have reliable data. I mean, most traders are paying for data. I'm paying for data, but if you're paying for data, then it darn well better be reliable. If you're looking and just Googling around and stuff on the net, it may have a delay. But I mean, I can even pull up my iPhone. I can not be at my house and look at something. I can be out anywhere in New York and look at something. It's not that far off. I mean, you know, even looking on my phone. Time frames, again, I focus on the daily for the gap and the 1 minute, but I do look at pretty much every time frame. So, I mean, the daily is the most important though, quite frankly, because that's where you're seeing the gap, and that's where I'm getting the 26 points off the daily. But the intricacy of my system, and you learn this in the class too, is how to take the trades in the 1 minute, because that's how you're going to get size to get it in like a sniper and take it. Okay, but for the options, you know, too, you're looking at the daily. So if you want to learn my system, it's called the Golden Gap. Now, what else do you need to be successful? Even if you come to me and learn my system, what else does it take? You've got to get a handle on your emotions when you're trading, in the sense that what? Not that you're going to act like a robot, not that you're going to not have any feelings or emotions at all, but you're going to use your emotions to help you make money, which is something that I do extremely well. So I call it conviction, confidence, I say, I love this thing. I love this gap. I love CMG. This is really going to work. And then if you do it, and for some reason the first trade doesn't set up right and take a stop, if you love it, you can retake it. So when you look at something, you really, if you believe in yourself and your emotions are strong for something, it can help you trade. Doesn't mean you ignore the information, but I find that so many people are so negative about things in the market because they've been through the ringer, taking classes, not learning how to make money, losing trades in the market. One of the market volatility indexes closed and shut down this week, the XIV, and anybody that was in it is, that was in it in the wrong direction just is done. I haven't looked at that today, but that is over. They're shutting it down. So, that was something that was out of control. But in my mind, it's like, why would any trader have traded that? When you look to get in the market, you're taking risk and you darn well better know what you're doing. So I run a live trading room, but everyone's required to take my class before they join the room with me. You got to know what you're doing here, people. The rewards are huge if you do. Sky's the limit with money. I had a guy last week in Amazon. He made $63,000 in an option call that I made on Friday. That was the most money, and he made it in 5 minutes that I ever knew of anyone that I've ever taught the class to in the last 5.5 years. He was besides himself ecstatic. I think the video is somewhere on YouTube where I talked to him about it. But the long and short of it is that the money's real. It's just a function of how much you want to risk. And when you get down on yourself because you haven't been successful, I mean, nobody rolls out of bed and wakes up and is born successful as a trader. You go through a process to get there. Maybe meeting me is your opportunity to finally do this and find success. I have a great class. I'm teaching people. People are making money with me. I've been doing this a while. And I think it's just about getting your head on straight. If you constantly live in the past and mistakes that you made or things that happened that you didn't like, you're never going to be able to move forward. You got to let it go. So trade with a positive attitude. You're going to need more than that. You got to have a good system that works and good money management, but you definitely have to have the right attitude or you're not going to be able to make it. And I find that there's a lot of people that don't have the right attitude. So coming with me helps. I talk about these things in the class a little bit too, but you really can't go with the crowd of day traders with the way that people think and the choices that they make. It's, a lot of people wanted to buy right back into the market after that dip. I didn't say that. I said, wait until the market gaps up. Wait until you get the confirmation. So we rallied hard on Tuesday. Then we rallied yesterday, dropped into the close, but we didn't gap up yesterday. Then when we opened neutral today, I said, oh gosh, we're going to fall. I said, it's going to take a while to get through that bar from Monday. We're still bullish, but don't go right back in. I know a lot of people just piled in at the low. I do not buy the low and short at the high and do crap like that. I trade gaps. I use my system, whether it's overnights or swing trades or day trades or anything at all. You have to be very, very focused on what you're doing, and you can't go with the crowd because most people lose. I'm sorry to say it, but it's true. And it's not just attitude, it's that people do these things like I was on TV with a guy on I forget what night it was now. I've been on TV every day this week. Some guy said buy and put the stop under the low from Tuesday. I bet we go through that today or tomorrow. So that's what most traders did. That's what most traders would do. He said the typical thing a trader would do, it's not going to work. So wait, but either way, when you go with the crowd, you're not going to find success. So focus on getting good. If you're good, the money's going to come to you. The time of the day is important, and you can work from home. Like I'm in New York in my apartment. It's a very nice way to live, and you don't have to be out in the crowds of traffic and work. Let me just see if I have any questions here. What account size is needed? You can trade whatever account size you want as long as you can open up a day trading account. You can open up a day trading account in a retail account or a prop account. At a prop place, you're probably going to need about $2,500. At a retail account, you're going to need $25,000. Your margin and buying power is going to be different where broker you go to. You have to check that out. If you want referrals, you can ask me, but every broker is different. I'm not a broker, but you only need the minimum account size to take day trades. All right. Any more questions here? Good questions here today. So the class teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the stock on the day, which you would learn this weekend. The course teaches price analysis and technical analysis on an advanced level. So you will learn one solid strategy to trade gaps, and you're going to learn how to read charts, support and resistance, which I take into account, but it's really the gap that's my focus. It's the technical analysis in the gaps. You're going to learn how to trade momentum and read it, And then you're also going to learn how to get conviction in your trading in the market as a source of wealth, because it really is a source of wealth. There's no place that you could go and make $3,000 in 5 minutes that I know of. I mean, doctors don't even make that unless they're surgeons. So you have to be consistent with what you do, and I am extremely consistent. Not only do I do my own strategy, the one I created, the same thing for 10 years, I do mostly short. I will occasionally go long, but I do mostly short, and my consistency even is in that way that I won't go long and short the same stock on the same day. So I am so consistent with what I do, which is why I have the high win ratio. So it's about chunking it out. You go in, you take it, you gotta have 100% conviction. If you would like to learn, I can come and teach you. It's you, you're getting the information from me, you're doing it. I'm empowering you to do the trades. And you're gaining the confidence in yourself. I'm teaching you the knowledge, but you're gaining the confidence in yourself when you're in the room with me. So I teach the class. The class is called the Golden Gap Course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. It's this weekend. So I know today's the 8th, but I still have spots available if you want to sign up. Saturday and Sunday, 9 to 5 Eastern time. It's online. Cost of the class is $5,499. Email me if you want to sign up. I'm doing a trends class too. You get half off that if you sign up at the same time. So it'd be $59.99. And if that's for long term, if you want to do swing trades or options, that's a good class. You'd save $500 on that. Normally it's $1,000. You have to email me if you want to sign up. The papers are not on the website. Now, I'm doing a Super Bowl special. I ended up running all week because I've been so busy, I couldn't get back to everyone with webinars and the TV. If you sign up by tomorrow, and this is a really good deal, I do not do this often, you can get the trading room and the option letter free to the end of the year. This is a huge deal. You could sign up for the class by tomorrow, do the class this weekend, or if you can't, you could do it in March, but you still have to pay and register by Friday the 9th. You get the trading room free and the options letter free until the end of 2018. You get all my trade calls all year. So that is a great offer. And if you like my method and want to do it, I would take advantage of it because it's not something that I'm planning on doing anytime soon. And it's really going to be a good year. I mean, it has been a good year. It's been a good year, period. And again, volatility is good for traders. I'm not going to complain about it. It's something that allows you to make a lot of profit. So far, it's been a better year for the market and an exciting year to be in my trading room and be with me. And if you've been failing in the market as a trader, 2018 might be your year to finally make it. If you want a trial, you only got 1 day left before the class. I'm sure we'll get something tomorrow. You can email me at melissa@thestockswoosh.com. I can give you a free trial if you want to sign in. And any other questions? Let's just see. How do you subscribe? Email me at melissa@thestockswoosh.com. Here, I'll go back to that if you would like to sign up for the class. And there's the options letter is a subscription service. It's an annual letter. It's $2,999 a year, but you'd get that free and the room free for the whole year 2018 with the class this weekend. There is nothing separate for the trading room. You have to do the class first to join the trading room. So the only subscription service I have with no prerequisites is the options letter. And you just get the trades for that. You have to know how to place the orders yourself. I'm just calling simple puts and calls. Any other questions from anyone here? Let's just quick take a look at the market. Since we have a minute here or two. There's no way we get around this area until we gap up, and I don't know how long it takes. I don't think we get up around it by tomorrow. So I wouldn't be surprised here if we drop another day tomorrow. I don't see how we're going to get up around this area. This was a hard sell-off bar. It doesn't change the trend of the market, but it's going to take us time to work through it. This was fine here. It looked good. I would have been happy if we had gapped up. We didn't. And then we tried to rally yesterday. Still wasn't along yet. Then this neutral open today, there's just too much weight on it. Too much weight in the market, and the money's moving around. So we still look great. There's the market. Still looks beautiful. But I don't know how long it takes for us to get around this here. Does anyone have any questions about anything else? Let's look at Amazon. Let's look at the strong stuff. Amazon's still holding up really, really good. NVIDIA is still holding up. NVIDIA actually traded over the bar from Monday. That's good. Let's look at Netflix. Netflix looks like the best. Between Amazon and Netflix, it's a tie for the strongest thing right now in the market.